Good morning, everybody. Hey, welcome to Wednesday, February 10th, as we look at where we are halfway through the week. Yesterday, mixed bag. We'll talk about that coming up next. A pile of earnings from household names that you and I know and use on a daily basis. So, hey, we'll talk about those and more coming up in just a moment. Hey, but don't forget, where are we at right now? Taxes, taxes, taxes. It's tax time. You know, as you think about taxes, though, let me remind you that taxes will probably be going up, given all the stimulus that we've packed out there, the change in administration. Look for tax rates to go up. You know, I wouldn't be surprised if 5 to 10 years down the road, we don't see ourselves back where we were in the 70s from a tax rate standpoint. So, with that being said, it's a great opportunity to see if it makes sense for you to do a Roth conversion. Maybe time now. Give us a call at 863-382-0037 to see if you might be a candidate to process through a Roth conversion. Hey, Dave's coming up next. Looking forward to our conversation today.
Out for summer to break training camp in a week or two, so that seemed appropriate, doesn't it? Can you believe baseball season is starting again? We just finished the Super Bowl. It's 8:42, 18 before 9. Time to check in on your money and see what's happening to your retirement funds this morning. Yesterday, Phillip, Statler, and I looked at the futures and said, look like could be a profit-taking day ahead of us. Well, nobody on NASDAQ got the memo, set a brand new record, and closed NASDAQ above 14,000 yesterday. Dow and S&P weren't off by much either. Let's check in and see what's going on. Phillip Statler is here from Statler Financial Services. How are you this morning, sir?
Hey, I swam in through the fog this morning to get to the office, and but glad to be here. Yesterday, yeah, you know, it was basically a lackluster day when we look at Wall Street. But man, after some of the economic numbers came out at 8:30, we saw a pretty good sized bounce on the futures this morning, given where we ended up yesterday.
Yeah, I mean, yesterday was, like you said, it was actually kind of a nothing burger of a day. NASDAQ setting a new record up by 20 is newsworthy because it puts NASDAQ over 14,000, but 20 points isn't that impressive. This morning's news is consumer inflation. And you and I always compare notes because we don't know for sure, given economic conditions, whether a number is good or bad news. Evidently, the market thinks it's good news. Consumer inflation last month up by 0.3%. The core, once you get rid of elective stuff like gas and food, we can live without that. That was flat, meaning 12 months, we've got a 1.4% consumer inflation rate. And evidently, the markets like it, don't they?
Yeah, they really do, because when I looked at the futures when I first got to the office, and then I look at them after that information came out, they almost, not quite, but almost doubled where their gains. So not the actual value, folks, not the actual value, but the gains. I mean, we were up like $80 on the Dow, and now it's up almost 160. So that the traders seem to really like the fact that inflation is relatively low, and we didn't see a big bump in cost.
And, you know, it's kind of interesting. Back during the depths of the job losses, when the COVID pandemic really started and got really bad, we were figuring that beating the inflation rate probably was good news because it would indicate consumer demand was remaining high. Now we're at the point where we look like we're kind of approaching a new normal that we may not like, but it seems to be there. And I guess they're starting to pay attention to low inflation being what they're looking for.
Yeah, it definitely, I guess, given the economic circumstances and so many people still kind of out of work, a low inflation is not good. The Fed doesn't like it, but I think the traders and the economy, they do like it. Wall Street likes it because that means that we can progress again without inflation. That means people don't need as much money to make up for those price increases. So obviously those people that are still out of work because of COVID, it's still any increase at all is going to affect them.
True, and it also augurs well for the loose money policies that Wall Street tends to like. If inflation isn't an issue, there's no reason for the Fed to change their monetary policy because, well, inflation isn't a problem. Let's keep the money flowing like a spigot. So that's kind of the other motivation involved. Earnings season is going on, and a couple of really, really big companies reported. General Motors was kind of interesting. They beat the street. But then they said, we're going to turn around and start selling electric vehicles. We know you don't want them, but we're going to sell them anyway. And that kind of gave for an interesting report, didn't it?
Well, it did because they had a really good quarter last quarter. They beat by like 29 cents a share. Revenue was ahead of estimates also. But when they looked for the full year guidance, because that's what they did, they gave some full year guidance this time. And it was not what the analysts and traders had expected. They were looking for almost $6 in earnings this year, and General Motors really pared that back to like the high $4 to the $5.50 range. So that's what's really affecting GM today. They're trading down about 0.75% right now.
And it was worse than that a little earlier this morning. I was kind of giggling about the notion that somehow you make an announcement a month before your quarterly report saying, hey, we're going to stop selling all those cars that you've been buying so well that have made us profitable and start selling stuff that a whole bunch of you don't want. Funny, that might affect guidance a little bit, right?
Yeah, I would think so. Definitely. That's one of those things. I think it kind of went over like Ford originally, way back when. And not too long ago, they really did away with the automobile, quote unquote, and went to all crossovers and SUVs, which they've done. And at first, I think that was not, that was kind of frowned upon, but now they've been able to make a big winner out of it.
Absolutely. But those of us who happen to like a sedan are pretty much stuck with foreign vehicles these days, aren't we?
Yeah, that's right. Or GM.
Yeah, that's true, but not that many of them left even. Besides, they're going to put them all on battery power now. We've got a few other household names that came out. I saw some re-ratings come out, and Twitter was among the re-ratings. I gather it was because they reported as well, huh?
They did. They came in before the market this morning, reported 38 cents a share. That was 7 cents better than expectations. Revenue beat forecast as well. They saw a user growth rate of 27%. Now, that was not what the analysts expected. They expected a little better than that. But I also last night was reading something or heard something about their advertising. Making some changes in their advertising. I didn't see anything in the report today, but they're really the traders are in love with them today, Dave. They're up 8.75%. If they opened right now, they'd open at $65.11. That's not quite $5 higher than the 52-week high that they've had. So, yeah.
And that's after missing a new subscriber count expectation.
Yeah. So you got to wonder. There's got to be some stuff deep down in that report that they liked.
That's got to be interesting. I know one of their sister companies in the category, Facebook, announced this morning that they're going to feed us less politics on our news feed, which I'm not sure I like them controlling what I see on my news feed, but I'm sick enough of politics without mind seeing it go back a little bit. I wonder if Twitter's looking at that as well.
It's interesting to see that going on, and we'll see how the regulatory body starts to look at that because, they claim to be neutral and, not having an opinion. And so some of their stuff coming out, their new rules are definitely not leading that way. They're kind of limiting free speech. And so we'll see what the regulatory bodies start to do to them.
Which is kind of why I've got a split feeling on it. Yes, I'm sick of it, but no, I don't want them telling me what I'm going to see either. It's kind of about, like I said, I'm torn. So, other companies reporting this morning.
Hey, we have some really big names today. Coca-Cola reported. They earned 5 cents ahead of expectations at 47 cents a share. Revenue was basically in line with what was expected. They saw a year-over-year decline in revenue, and income, which is not good. As well as their case volume. So they're trying to battle back from that. And so they've made some improvements in this pandemic environment, and they've kind of been rewarded for it. They're up 2.3% this morning.
That's good news. They give an idea of how healthy the market is right now. 2.3 doesn't even come into my top 5 on the gainers.
Hey, so we had Under Armour. I remember in the 4 or 5 years we've been doing this now, Under Armour has been a topic of discussion on several occasions.
Mm-hmm.
And they came out, they earned they earned 12 cents a share, which was 7 cents ahead of expectations. So that was good. Actually, I'm sorry, I'm reading that wrong as I look at this real quick. They're expected to lose 7 cents a share. So
Oh,
they might be on your big winner list today.
they
Revenue
are.
beat as well. And so they're up over 10% this morning, Dave, and they'll open at a new 52-week high today too.
As bad as their performance has been on and off over the last couple of years, they were one of those that I was kind of putting on an endangered species list. It's good to see the change on that part.
Yeah. So let's look at another big winner that you should have on your list, and that's Lyft.
Mm-hmm.
Uh, they lost money, but they didn't lose near what was expected. But they lost 14 cents a share. The analysts were expecting like 58 cents a share. So they did well there. Their revenue also beat on forecast. They said that they think that they're going to become profitable. Get that, profitable the third quarter of this year, which is about 3 months sooner than their original projections. So, like I said, I'm sure they're on your big winner list today. They're up a little over 10.5%, and they will open at a new 52-week high, like $59.25 right now.
Wowzers. Top the big winner list and just don't lose as much money as they expected, right?
That's right. And become profitable sooner than expected. You got to give them credit for that.
That's legitimately big news. I agree.
It is.
Elsewhere.
So two more that we've really talked about in the past on different occasions. Mattel, um, they came in and had a profit of 40 cents a share. That was 17 cents ahead of expectations. Their revenue was ahead also. And so they were up higher than what they are now. They're up about a 0.25% right now. So not a big winner like we saw earlier. The last one I had was Yelp, and we've bantered back and forth with Yelp on several occasions. They came out with a quarterly profit of 27 cents a share, compared to analysts expecting them just to break even. Revenue was above forecasted, and they did some projecting too. They came out and projected that it will have a year-over-year revenue growth this year. And so they're probably not on your big winners list, but on a normal day they would be. They're up almost 4% today.
Wow. That's one of the companies that I've always kind of wondered about the future of, so I'm glad to hear them doing well. Resetting the table this morning, it was a flat day, only down 10 on the Dow yesterday, down 4.5 on the S&P, and up by 20. Just the fact that it was a record for the NASDAQ made it a newsworthy day, but it was generally a relatively flat day. Kind of alluded to it before we got into the meat of the reports this morning. Phillip, how are we doing 45 minutes early? I'm betting it's good news.
It is. Everything's moving up. We got the Dow up 141 points. That's a little less than 0.5%. The S&P 500 is up 1938. It's up 0.5%. We've got NASDAQ up almost 0.5% also. Small tech, small company, the 2000, it's actually ahead of everybody. It's up almost 0.7% this morning.
Wow.
Yeah. So then commodity side is all green today too. Silver's up 0.33%. Gold is up 0.8. Crude oil at $58.60 a barrel, up 0.4.
Yee.
Yep.
Okay, time to complain.
Yep.
Going
Close to
world
60.
market. Yep, I don't like it. And Brent crude's over 61.5 now. The overseas markets, the Chinese and Asian rim markets, all up off of our successes from yesterday. European markets are up, not quite as much midway through their day, but it's green ink worldwide this morning. Phillip, I know you've told some people when we talk about risk that they don't have enough in their portfolio. Everybody's a little bit different, and that takes some solid eyes to establish how much I should have for a strategy in my retirement. How do I find you to get that strategy?
You're absolutely right, Dave. It is not good to have not enough risk in your portfolio also. And, recently I've sat down with some folks that were in that situation, and we've been able to rebalance and add them a little bit more risk to their portfolio. Do that. Give us a call at 863-382-0037 just to find out how much risk you do have in your portfolio. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here tomorrow morning with a whole pile of other news about what's going on in the marketplace and where we're heading first thing in the morning here on Light FM. Phillip, thank you so much. We'll catch you tomorrow.
All right, man. You have a great day.
Thank you. Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. Again, I want to thank you for joining us. I hope that you got something out of today's show. Remember that risk is one part of the things that you can control. The other thing you probably need to be looking at is taxes. We are in the lowest tax environment you and I will probably ever see. And so it's a great opportunity to do some comparison to see if it makes sense for you to do a Roth conversion. Give us a call and let's walk through that process to see if it makes sense for you to start doing some Roth conversions now. 863-382-0037. Have a great day. Hey, I'll talk to you again tomorrow. Bye now.